Hello fellow traders, Philip Tigerson here from Stock Market Strategy. This video will be about support resistance, one of the most useful things in trading. I'll teach you how to spot support and resistance. But first, our advice is always know where the nearest support resistance is. And that's because you never want to place your target just above resistance or below support. That means that if you're looking at targeting 100 and there's resistance at 99.5, you might be better off placing your target just below that resistance, otherwise you might not get it. Always look to the left of your chart and make sure you know where the support resistance is so you place your target properly. Another advice is the support and resistance is a zone. You have to keep that in mind, especially when you trade a trading range. If you target the top of the resistance up here, or you target the bottom of the support, you might not get your target all the times because price could decide to turn around slightly before your target is hit. So if you trade a trading range like this, don't target more than this as a maximum, otherwise your hit rate will be lower. There are 6 kinds of different support resistance. The first is the swing high low. The second is what were support becomes resistance and vice versa. Then we got small support in as when gap is filled. We also got support in moving average, which is called dynamic support. And then we got prior day high low, which works best for day trading. And then round numbers. But let me go through these 6 one by one and show you on charts what I mean. Swing high low. That is where the last buyer / seller came in. So we expect support to come in there because that's the last line of defense. This is the purest form of support resistance because it is supply demand. Here you see a trading range, and also again notice that the support and resistance are zones. Up here you see the resistance because we got a swing high and a swing high here as well, but we also got some swing highs here, and that is why we're creating a zone instead. And notice over here how we only reach the low of that zone. Had you targeted the top, you would not have got your target filled, and you would have seen all that open profit disappear and potentially turn into a loss. And the same goes down here with the support. There is support here, and here it breaks a little bit through and create a support zone instead. So keep that in mind, that support resistance is zones. This is support resistance using swing highs and swing lows. The next is what were support becomes resistance, and what were resistance becomes support. It's kind of a second chance that if you, for example, short a resistance and price breaks through and comes back and tests that resistance, you have a second chance you can get out at your entry or around your entry. But let me show you on the chart. Here you see what were support becomes a resistance, but again it's a resistance zone. First it works as a resistance here, and then it turns into a resistance zone over here. So what were support becomes resistance, and again we see it down here again as a zone. So keep in mind that support resistance is zones. But you see how it works with what were support becomes resistance. And it's a very powerful thing, and the reason why it works is all those traders who went long over here gets a chance to get out when it comes over here. So they buy it here, they get their second chance and sell it here. And that selling second chance is adding fuel to the shorts, and then the price can then drop again. So that's why you need to keep an eye on what were support, because that can become resistance, and what were resistance can become support. Often when a gap is filled, it acts as support or resistance and bounces from there. So if you have a gap up and price goes down and close the gap, it can act as support. These gaps work as support resistance. They're not the most powerful ones, but they do work. Let me show you here. We got what I call small resistance. Here we got a gap down. The same day we actually close it, and we do see some resistance up here, and price has to retrace before it can climb again. Over here we see small support, price comes down to it the same day as we created that gap, and price bounces a little bit, not a lot. Here we got a bigger resistance, and notice why. This is a gap that was created the day before, and we failed to close that gap. That means the market was weak. We couldn't close that gap the same day. The day after, we retraces up to it, and then we run into that gap fill, which then acts as resistance, and we sell off. This works best if you use it for intraday trading, when you use the gap fill as support resistance. Moving averages are great as support resistance. They're what we call dynamic support resistance. Let me show you in a chart. Before you use moving averages as dynamic support resistance, you need to see it work first. Otherwise, you can just throw in 4 different MAs and you have no idea which one will act as support or resistance in that matter. So in this case, what we do is that we look back in time and see if the MA has worked as support. And then we can assume, and it's all about probabilities, that it will continue like that in the future. And we see it find support at this MA very nicely all the way up. And that's how we use moving averages as dynamic support resistance. Prior day high and low. Again, it works as support resistance, but best used for intraday trading. Let me show you a chart. Here you can see prior days high and low. You can see how the prior days act as resistance and here support. Again, you can see how prior day low here acts a little bit like support here. And it continues down here. So prior day high and low works as support resistance and is useful for intraday trading. Round numbers. They also work as support resistance. They're not the best, but they work. The reason why they work is because people look at these numbers to take profit or buy at these levels. So keep an eye on those round numbers, for example 10, 20, 30, 100, 200 and so on. If you're looking to book profit, be smart about it. Don't book at 100, book at 99.8 for example. You might be unlucky and someone else puts a sell order just below 100 and you don't get out because you wanted a round number. So never place it at 100.1, place it at 99.9 instead. If you're looking for a free trading course, then please visit our website www.stock-market-strategy.com. Have a good day.